I'm making this huge six-figure salary. I'm climbing the corporate ladder. However, I felt that I was not fulfilling my true potential. I felt that there was more I could do, not just for my family, but for the world.
Welcome, everybody, to our Hero Capital show. I'm your host, Tim Mai, and today we have a super special guest on the line with us, Martinez. She's a good friend, and we started out in the syndication war about the same time in early 2022. And Andrew has just been kicking ass and taking names. She is the CEO and founder of Beam Investment Group, which is a private real estate investment firm here in Houston, specializing in fast-growing Texas markets. And she started investing in residential real estate in 2009, eventually transitioned to commercial real estate in 2022, currently invested in 2,800 multifamily units. And she's also a general partner in 1,600 units in Texas, 8 large apartment communities. As a former accountant, CMA, and CFO and controller, she managed global companies with teams with $20 million to $600 million in revenues in logistics, media, and healthcare sectors. She graduated from Rutgers University for her bachelor's and NYU Stern Business School for her MBA. She's a mom of three and an amazing capital raiser and fund manager. She has raised over $10 million in the last not even 3 years yet. So, with that, let's give Anjou a huge welcome, y'all.
Well, thank you so much, Tim and Logan. I'm so excited to be here because just what Tim had mentioned, we started about the same time. And it's a funny story because he actually knew my sister and their two boys. They were all in Boy Scouts. So he's like a family friend. I'm just truly blessed to be here in a great market with great people such as Tim.
Yes, and yeah, really honored to have you on the show with us, Andrew. That funny story with your sister, that is Mike, and I'm sure her kids as well, right? My two boys are now 17 and 20. So it's such a small world that we live in, not just business in general, but when we're talking about the real estate syndications war, it gets even smaller. And so, yeah, this business is all about relationships and it's going to take you really far along. Andrew, let's start out. If you can share with everyone a little bit about your journey. What got you started in the real estate investing journey back in 2009, and especially what got you into the syndication space in 2022?
Sure. So, like most of you, we were taught to get good grades, get a good education, graduate, get a good job. So that's exactly what I did. I even went all the way up to getting my executive MBA at NYU, worked at Wall Street as well. We used to live in New Jersey. And we always diversified. So I read the book Rich Dad, Poor Dad. So that's what started me to investing, at least in residential real estate. But my husband's also in finance. We were both busy climbing the corporate ladder, but we just knew we'll do real estate on the side. We never did commercial real estate until we moved to Texas. So we moved to Houston 3 years ago, August 2021. I didn't start my company, Beam Investment Group, until around like February, March of 2022. And that's really because when I moved here, and we moved here because we were done paying state income taxes, right? It's so expensive. And of course, it's much colder there. Although right now in Houston, it's cold as well. But when we moved to Houston, the goal was really for me to start some type of business. And since we've already done something on the residential side, I said, you know what, let me see what we can do on the commercial side. I'm also a mom of three, as Tim mentioned. So for me, striking that balance was important because I knew, all right, great, I'm making this huge six-figure salary. I'm climbing the corporate ladder. And I felt at that time I've already climbed it, right? Because I've already reached my goal of being a CFO. However, I felt that I was not fulfilling my true potential. I felt that there was more I could do, not just for my family, but for the world.
Mm,
And the more that I dug in and looked at what options I could do, the more that it led me to real estate because we were already okay with the residential side. So I said, you know what? Let's start looking into commercial. So when I looked at commercial back in 2022, remember, this is after COVID. The market was very different than what we have now. But during 2022, early 2022, yes, it was booming. But then at the same time, I've heard a lot about multifamily. But I didn't really just stop at multifamily. I went to different conferences. I looked and compared different asset classes, right? Industrial, self-storage. I looked at mobile home parks, offices at that time was not doing well, retail. multifamily. And I went to a conference in Houston, Briar Club. That was my first real estate conference, small one, just one day event. And the lenders, right, themselves were saying, and also the brokers were saying that the multifamily and industrial were the darlings of the industry
Mm.
historically. Okay. So I'm not just trying to, make it up. I just figured, let me do some more research. And so the more I looked into that, I said, okay, now at least it's down to two, right? Industrial versus multifamily. I chose multifamily because one, I feel like we're providing a community, right? It's a necessity. We're providing a community for our tenants. And I've done a lot of community service work as well. So I felt that, oh, great, 100 units right there. We have 100 families we could help. So that was my logic really of going through multifamily versus industrial. And from that point on, I've never stopped. And here we are.
Wow. That's amazing journey there. Did you start out as an LP or did you jump on as a co-GP pretty early on?
Yeah, so I started as a limited passive investor, but that was only for a few months. Remember, I had worked throughout my corporate life, so I had the 401k that I had rolled over to an IRA. So I had both. I had a traditional IRA and a Roth IRA, and like they were in different stocks. At one time, I think I'd invested in Facebook when it was in its initial IPO. So I've
Oh,
had
wow.
different holdings, and I said, you know what? I could at least start using these funds into passive investments. So again, I registered my company, I think like end of February, March is when I started going to these events. By April and May, I've already placed all of those funds into different deals. But I was strategic. So I'll give you one tip that I thought I did well back then was I didn't just place my capital to whomever, right? Because there were a lot of deals, especially during 2022. I
Yep.
was strategic in a way that my due diligence process was, okay, would I partner with this group in the future when I'm ready to be a general partner was one of my criteria. Because I didn't want to just get into it just to be a passive investor. Eventually, I wanted to also be a general partner. Why? Because one, I was still younger, right? 30, 40 more years that I could work. So to me, this was a longer game. And lo and behold, now, right, 3 years later, my partner for the car wash deal, which is a family office and an SEC lawyer, are one of the groups I had partnered with as a limited partner back then.
Mm.
So you don't know where these seeds that you're planting are going to grow. You just have to continue to vet the people. I always vet the sponsors first. Even as a passive investor, I want to make sure that one, can I learn from them more than just getting the financial reports, right? Because everyone's going to provide that. I wanted to make sure that I'm able to gather maybe connections or relationships or something more than, let's say, being an LP in a deal, right? And then secondly, I was also strategic in the location. I didn't just blanket the whole US and said, I want to be an LP there, because then how would I really know how I could compare the market and be an expert in something? Real estate is very local. So back then I was already strategic. I said, you know what? I'm going to choose, if I'm going to choose one location, it's going to be Texas. And it's not all Texas right away. I just started with Houston because I was based in Houston.
It makes a lot of sense. Yeah. I love the way that you think and the way you approach the business. And yeah, like it's very good to be strategic that way. You grow a lot faster. And obviously you proved that your growth has been amazing. So how long was it before you got into your first co-GP deal?
Sure. So that was April and May. By June, I was in another conference because I was traveling. I just gave myself 1 year to really study this, learn this, because I said, if I'm going to start a business, and I had other options before, right? I said, okay, what if I had done, let's say, franchising, bought a restaurant, or bought some type of business or start my own business? Either way, I probably would have shelled out 50 to $100,000 of either franchising fees or some learning cost. So
Right.
my first year, I just gave myself that time and that freedom to step away from my CFO role and said, you know what, my husband's going to continue to work and I'll just go ahead and really learn whatever I could. So June, I was at Dan Hanford's event in, I think it was South Carolina, MFIN Con, which I think they stopped now.
Yeah.
But I didn't really know, I don't even think I had business cards at that time, but I was going to attend the conference. In that conference is where I had met my first partner as a general partner. But how I got into that was I was recommended. See how relationships work? I
Mm.
had met another guy who's also CFO, accountant. He's from Canada. We had met at another event in Dallas. Let's say that was in April or maybe March or April of 2022. And we just stayed in touch. And he's the one who recommended me to be a general partner in my first deal, which is in Houston. It was in Sugarland. It was a 288 unit apartment, class A in Sugarland.
Amazing. Yeah, I remember that deal too. And I wonder, I was there at the Dan Hanworth's event. I wonder if that's where we officially met. But yeah.
We were the same mastermind too.
Oh,
I
Race
think we were,
Masters. Yeah.
yeah, I think you were already a
Oh,
member. I joined a
actually,
month before May is when
okay.
I joined.
So at that event was when I joined. So
A
yeah.
little before that. And I said,
Okay.
oh,
Yeah.
great, Hunter and Adam were going to be there and I get to meet them.
Very cool. Going from first starting out as an LP and learning how to do due diligence as an LP, and then a few months later having an opportunity to go on as a co-GP, what helped you in doing due diligence both as an LP and then later on as a co-GP to decide that, hey, not only am I going to invest my own money, but I feel comfortable enough to have my friends and family invest alongside with me?
My first criteria is vetting the sponsor. What do I mean by that? Yeah, you can get all the paperwork from them, giving you all the deals they've done. And they're basically just going to tell you all the right things, right? And that's not enough. So I am grateful to be not only in Houston, but to have certain relationships from people that I've met, like Trevor, for example. In some of the deals that were presented to me, I asked Trevor and I said, Trevor, what do you think of this
Mm,
guy? And until this day, I've not done a deal with that guy because that group, at least from Trevor's experience, didn't give him the best experience. Because it doesn't, a lot of us started around the same time. And I remember Trevor and I, we all started around that time frame. And it's interesting how some people treat those that are newer. They don't give us enough information, perhaps, or if you're not really investing all this tons of money, they may not really give you that, not just the information, but the help. And so I am more leaning towards those that are like Tim, open to information. And it's more, let's figure it out together versus, you know what, I know this and I'm not going to share it with you. And so when I vet the sponsor, even for the first deal, for example, people that I have met through different events or meetups, local meetups. That's why I invest locally because I get to talk to people. And a lot of these conversations are not done in front of the stage. They're done during coffee meetings, lunch breaks, right? This is like friends. This is how friends would communicate. So for that first deal, I asked some of my friends, have you
mm,
invested with them in the past, either as an LP or GP? And some of the things I got, for example, Leia was the other one that I had talked to because she's here in Houston and they were an LP in this sponsor's previous deal. Or for some of them, maybe they were also co-GP in their other deal, and I would get a recommendation of they're very good in the reporting, they pay on time, and they're just really class act. So those are the words I want to hear. The other thing, here's a secret. You want a shortcut? I'll give you one. And I didn't learn this until later on. If there are other owner operators that are investing in that deal as a passive investor, that's a good sign, meaning they're not a KP, they're not a GP, co-GP, right? They're basically other owner operators. And let's just say they're
mm.
investing their own IRA money in that deal. That's great. So I come to find out because I was the newbie in that group. I have other owner operators that's never raised capital for anyone else, only for their deals that had raised capital for that. But I come to find out that in that deal, there were other big owners, operators,
Mm.
5,000 plus units that were passive investors in that deal. So I was like, all right, that's a good sign.
Yeah, that's really good. That's a really good sign. And yeah, and whenever you're investing in properties that are local to you, another advantage is that you get to drive the property, you get to tour the neighborhood, like you get a really good feel for that investment. And I always favor investing locally over out of states type of investments. Anytime that I can drive to a property, yeah, and drive around the neighborhood, like it's just help with feeling safe about that investment. I love the homework that you do in talking with other operators, other LPs, because those are the kind of homeworks that we can't get from textbooks, right? We can crunch numbers all day long, But being able to learn from someone else's experience is invaluable. And I love that you knew to leverage that very early on. So share with us your experience. It was your very first raise. How much did you raise for that deal? And then yeah, share with us like some of the lessons that you learned, some of the challenges that you that learned from that raise.
Great. Yes. So when I was asked to join the team, I wasn't even ready. I was like, again, I had no business cards. I was like, I'm just starting to learn this. But I had to make a decision because I know that whether I join or not, that ship was going to sail.
Mm,
And so when I vet the sponsor, I knew that they're all great. And I've done my due diligence on that side. That same day when they called me, even though I think it was like 4 o'clock, I drove to Sugar Land. I live in Cypress. So that's like from Northwest all the way to Southeast of Houston, traffic. But either way, I drove to the property, checked it out, started talking to the tenants because then the leasing office was closed. And then I found out that the bus stop for school was right there and that these families are very happy. And I just wanted to get a feel of it. So I said, all right, that's good. And so, you know what? Out of blind faith, I was like, I'll just join. Of course, they gave me at least $1 million to raise. And I didn't know how that was going to happen because some of my friends from New Jersey, New York, didn't even know I moved here. I didn't talk to, this was after COVID, right? We just moved August 2021. I didn't really know who was going to invest. I didn't even know if they knew about real estate syndication, but it was just, I knew that the group was great. And I know that my potential investors are very savvy people. So
mm,
I'll tell you, my first deal, I talked to about 40 people through, and these are not all phone calls. Most of them are texts. My text would say something like, hey, it's Andrew. We haven't talked. And I just wanted to reconnect that. But I was tied with time because by the time they talked to me, they were already close. Like they gave me basically 6 weeks,
mm.
right? And so I said, you know what? I have nothing to lose. If I don't work it out, then it is what it is, but I gave it my best shot. So in my text, all I asked them is, are you looking for passive income, tax savings, or creating like generational wealth or building equity? I think were my three. And then I just tell them that I'm investing as well, $75,000 in this deal, right? And these are the returns. Okay. And then some of them would be like, okay, yeah, send me some more information. One guy was like, yeah, sure, sign me up, 100K. So that
Nice.
first deal out of about 40 people that I spoke to, I raised 1.285, so almost
Nice.
1.3 dollars from 8 people, including
Eh,
myself. I only put 75K. I'll tell you one thing. On that first deal, I had one guy wrote me $500,000. And
Wow.
I tell you why, right? So this guy is a classmate of mine, plastic surgeon, and I almost didn't talk to this guy, right? Why? Because I was like, I've been to his house in New York. He's wealthy. Like he's a grandfather already. He doesn't need the money. At least these were my limiting beliefs. I almost didn't talk to this guy. But then I said, you know what? I committed to raise at least $1 million, right? And your track record is really contingent upon how you perform in your first deal. So I was like, you know what? At least I could ask. If I don't ask, that's at least 100% no. If I ask, at least I have a 50-50 chance. So I did ask. Okay. So let's just say I asked on Friday, exactly what I just told you. That's what I texted him. I didn't even call him. And he was like, send me the deck, right? I sent the deck, and within 3 days, he's like, I'm investing 300 to 500K. And I was surprised. I was like, I guess this is how
Wow.
it's supposed to work. And then I come to find out that he started talking to my other friends that were already investing. And so that's how I started with my first one. And I'm
Mm,
so grateful for them because I felt like they're like my lucky first group. If these folks probably didn't invest and I didn't have a good experience in my first one, I probably won't have the next 7 deals. But that first one, I went all out. Not only because I was investing, but I really believed in the project. My sister invested, right? And it's not bad. I'm talking to 40 people or so and getting about 8, including myself, to invest in the deal. And only my sister and I live here in Houston. The rest weren't even here. They never saw the property. And I come to find out later on, that guy who the doctor that invested $500,000 in my first deal, he used to live in Sugar Land. And I
oh,
didn't know, there's no way I would have known this. When he was doing his residency, he used to live there. So you see, you just gotta talk to people because then and then you know what? That group are also the most grateful group or like investors that I have, even with him, right? Because then you're solving a problem for them, right? They have no idea how to save money on taxes, right? Especially if they're in New York, they're probably for that bracket, they're paying 50% of whatever they make back to Uncle Sam. And so you're solving a problem for them. So just feel, you know what, you're doing them a favor because you are. It's a service that we provide.
That's amazing. So that first group of 40 that you contact, they all were existing relationships that you met, yeah, that either coworkers or friends from the past. Is that correct?
Yeah, it's a 506B deal. So out of the 8 deals I've done, the last two, so first to the sixth were all 506B. Seventh
Mm,
and eighth were finally 506C. I tried it just to change it up just to see how it works. But yeah, the first 40, some people ghosted me. You know how it is, right? You'll talk to people, they're so excited, and then before you know it, they're gone. And then now they're coming back, right? It's just, it's
that's
part of the
good.
game.
Yeah. And how did you go about deciding who you're going to reach out to? Did you have a strategy behind it, or did you just went down the list alphabetically? How did you go about it?
Yeah, no, I just really started with, because again, I was given about 6 weeks, right, to closing. So I started with people that I know could potentially invest. When you're friends, you don't really ask them, are you accredited or not, either, right? And so I just had a feel of, okay, maybe these people may be interested. So that's how I got started. I still, to this day, I have not gone through my list A to Z. I still don't have a CRM newsletter or anything like that, which fixing for 2025, and we have more than 100 investors at this point, right? Raised more than $10 million. It's really boots on the ground. People have built the relationships with throughout the years, right? The first two, great. Yeah, you can probably call from your phone. After that, if you haven't done much in terms of activity outside of your immediate circle, then it may start to dry up depending on what your circle is. So I was active, and that's how Tim and I would see each other. Even Trevor or David will be in meetups locally. We'll go to conferences because you really want to be out there shaking hands. And I also was good in just building relationships overall because business is just one side of my life, right? I'm a mom, right? So some of my investors are my kids. So my kids have their friends, and the parents of those friends have invested as well, because just because they're asking, what do I do? And sometimes they'll have questions on how to invest in real estate. And so you could definitely open it up to the rest of your life, not just, let's say, the real estate side.
So let's talk about that, like what that process was like for you. You started with friends and family. How did you begin to expand your network? And at what point did you start your meetup?
Yeah, I started my meetup July of 2022. And I'll tell you, so
Mhm.
again, first year, it was like I was just doing whatever it took. Okay. I'll tell you my first meetup that I attended, that wasn't mine yet. I drove to Dallas in Frisco with Stonebriar Country Club. And again, I just came from from New Jersey like 3, 4 months ago. And so it was my first 4 hour and a half drive without stopping because I wanted to meet this group, right? And it's the same guy, the family office and the SEC lawyer,
Mm,
right? And I wanted to attend their event. I didn't have my business card. I just wanted to check it out because they're having a free meetup. That was the first meetup I attended. And then as I've attended different groups in Houston, none of them really worked for also my schedule, my kids' schedule. So for example, there was one I was attending on Saturday mornings, and my son usually would have soccer at that time. So I said, you know what? I gotta start my own. So it wasn't like someone told me, hey, you gotta start your own meetup. I was just doing what it would work,
mm.
what I thought would work. So fast forward to now, our meetup here in Houston, we meet on the last Wednesdays of the month. We now have more than 300 members, right?
Wow.
And again, all of them show up at the same time, but it's just good to have that consistency of people showing up, getting educated. And I think that's how David and I had met. He just showed up at one of our meetups, and we've been friends ever since. And so I think that's the best way for me, just like what you're doing here. You're having and I think I was there for the first, either
You
first or second
were your
attendance.
first very first one,
Yeah,
yep.
yeah. So it's just great to build a community. I think that's really what we've done, is to build a community and see what value we can add, how we can help each other out.
Gotcha. Okay. Attending other people's event, other people's meetup, started your own meetup was how you begin to expand your network. Any other ways that you have done to further expand your network?
Yeah, I think masterminds are good too, right? Just to create that distinction, because most of the meetups are for free. But when you're in a paid mastermind, like Tim and I were in the same mastermind, it's great because not only do I get deal flow from there, meet really good
Mhm.
partners, but the quality people could also be better because then everyone's paying to
Yeah.
play. And a lot of the groups I've joined before were mostly real estate related because everyone already loves real estate, either residential or commercial. So I've joined some of those groups as well. Now I'm starting to venture out outside of just, let's say, real estate, the same ones that we're all in, because after a while, it's hard to expand. So it's good to be in different groups. So I've started joining different groups as well. I know for some of the masterminds, we were taught to also expand our reach via social media. Let's say I'm more active in Facebook right now, starting to be more active in LinkedIn or even Instagram. Some people have their YouTube. So for me, what's worked so far, Facebook for sure, because I already have a good network of people. And also, I think as I start growing and being able to speak on stages, I think it's helpful. Like tomorrow, I'll be in Dallas speaking at an event as a panelist. So I think that just opens up doors because right there, you're perceived as an expert. So the more that you can position yourself to be out there, I think the more it'll help you.
For sure. And in terms of your meetup, did you find yourself attracting a good mix of GPs and LPs type of people that showed up for your meetup, or were there more GPs or more LPs?
I would say more LPs. And I think that's because of the speakers we bring in are mostly GPs. And we've had people from IRA, CPAs, lawyers. So we mix it up. But sometimes I'll teach whatever it is. Let's say I come from a conference, I'll teach for that session. But I think it's helpful to just vary it. But for the most part, also because 23, 24 had been tough for those people that, let's say, got started 2019, 2021. And so they're so busy operating their deals that they're not really out there trying to look for LPs because they're not racing, they're not looking for the next deal. Those that are usually out and about are those that are looking for capital. And so
Mm.
that's what I've seen, at least for the last 2 years, in terms of attendees. And I think 2025, that's going to shift, right? Because then now markets are more open, equity is out there. We're able to attract a lot more GPs as they become more active for their next deal.
Now, I know you do your meetups at Spring Creek Barbecue. For those that never done a meetup before, and to share with everyone, what are some of the things that they should consider when planning to host a meetup, planning for the
Mhm.
location of the meetup, and so on?
Yes, I started with Spring Creek Barbecue because one, we get a free spot, right? Like it's a private section, right? With probably, I think we could fit even 70 people if we wanted to. I think the most we've had is probably 45, 50 people at one time. And so I never wanted to be packed. You got to visit the site. And ideally, for your first meetup that you're hosting, you shouldn't be paying for it. Like I knew a group before that were hosting it at Whiskey Cake. And I asked them, well, but then they had to guarantee the food and there was a minimum.
Mm.
It's hard to know when you're already providing a free service if you're going to be paying out of your own pocket. So that's one. Then secondly, speakers. How do you attract consistently very high quality speakers so that people would really want to go out? So at one time, our speaker is like the guy for the top Houston multifamily real estate broker, right? And pretty much I think 5 or 6 of my deals were all from him,
Mm.
right? And I didn't know this from before, but when he spoke at my meetup, I just knew we were using his company. I didn't realize he was involved in all those transactions because
Uh,
he's part of the seller side, right? And I'm the buyer, so I didn't really talk to him. But just giving you an idea, as you grow your base, you're able to attract really, and I wasn't even sure if I was going to ask him, but I emailed and he responded. He was actually happy that he was out there. So don't be shy about asking who could potentially be a guest in your meetups. But I think the more you're out there, or the other thing is partner. How can you find a partner that you could both, and it's not a business partner, right? Just for the meetup, for example. Maybe certain days you're traveling, you can't make it for whatever reason. You want to partner up. I think that's helpful too.
yeah, for sure. And plus, you have an extra person helping with promoting the event. Yeah, anytime you host any kind of events, getting people to show up is the hardest thing. And the more help you can get to invite people and following up people for them to show up, the better. And let's talk about you have now done 8 different deals, and then you also started raising for car washes as well with one of the operators. How did your investors, what was their reaction that you now expanded outside of multifamily?
Yeah. So from the beginning, although they knew it as multifamily, because I was a passive investor in multifamily and all that's all I talked about, right? Multifamily. But when I started transitioning to car washes, I explained to them that for them, it's really the returns. That's one. And two, they also want to be diversified. I got this tip from another family office. I was in New York for another event, and that family office has probably funded, I don't know, $50 million of this operators deals here in Houston.
Mm,
One of the, because he was asked, what are the advantages and disadvantages of investing with this group? And he was asked that. For the disadvantages, he said that, you know what, the only disadvantage is all of their holdings, let's say 30 properties, are all in Houston, meaning they haven't diversified. So that was just something like another nugget I parked in my head. And I said, you know what, I think my investors also need to diversify. It can't be all multifamily in Houston, right? And for me, I'm always, for every, let's say, deal I do, there were probably 8 to 9 others that were presented to me. And these are not deals that we're still underwriting. No, these are deals that are locked in that I could readily just either raise capital or partner with. So they're done deals for the most part. And so I started looking at what are the returns currently for multifamily versus, let's say, businesses. So I like businesses because at the end of the day, it's private equity. We're placing capital in real estate if real estate makes sense. We're placing capital in businesses if business makes sense. The good thing with the car wash is it's both, right? It's the business and the real estate. And the other difference too is the cash flow component is really more quarterly versus, let's say, multifamily, where it's all at the back end for the most part, right? Like it's all
right.
heavily adjusted towards year 5 when the deal sells. So I want to make sure that my investors are getting cash flow. So now, because again, I'm always expanding, I'm always growing. I was in Vegas recently, and then again, there's another guy I had met, a billionaire, and this guy invests in AI, right? And he's putting $20 million of his own money in this deal. And so if I wanted to partner with them, I could have a small allocation for my investors. And when it's businesses like that, it's going to go IPO very soon. For businesses like that, it's not, forget 2x, or like car wash is 3x in 6 years. Multifamily, let's say, is 2x in 5 years. For certain businesses or IPO, it's like 10x.
Yeah.
Not in 5 years, okay, more like 2 to 3 years. So my ears and eyes are always open for opportunities. I'm not an owner operator in a sense that I have construction team and property management team. I can't pivot. I can pivot depending on what's the best and highest use of the capital.
I agree. That's what I love about like the role that I play within the syndication space as a fund manager. I can be as diversified as I want. I can cherry pick like the best deals without being biased to any specific deal or any specific asset classes. So now you have raised money for deals as a co-GP, you've raised money for deals as a fund of funds. Which model do you like more?
Actually, they're both good depending on what deal you have. Okay, so I'll explain a little bit. My first 2 deals were co-GP, right? Back then, fund of funds wasn't even a thing, or at least that's not something that the operators were willing to welcome. But then on my third and my fourth deal, I did create 2 funds. And they're SPVs, which are single purpose vehicle, or sometimes called SPE, single purpose entity. So even though it's a fund, it invests only on that asset. Okay, so I don't have a blind pool fund. It's basically almost like a pass through. And we did that because at least my SEC lawyer preferred it that way. It protects my rights, interests, and so as for the operator. Also, because that owner operator is vertically integrated. So there's really, I can't say that I'm going to be asset managing this deal when I'm not. Like, let's
Mm,
be honest, they already have the team for that. So for cases like that, they're vertically integrated. I have to come in as a fund manager. And so that's what I did for those 2 deals. Same thing with a car wash. That's a fund because the family office, they're not willing to have multiple co-GPs. Because then for the business loan, they're going to want like all of the bank requirements would just be more complicated, which we don't need to complicate the deal further when I can just set up a fund. Co-GP is much better when you truly have asset management role in the deal. And it's helpful, let's say for me, for example, I'm local here. And so the deals that I'm asset managing are here. And it's easier for me to do that. But now, okay, so future, I'm leaning more towards opening a fund. Why? Because it's much better if, let's say, I have, let's say, a $25 million fund and I can easily place the capital based on the current deals. Because I feel that the last 3 years, it slows me down, right? It's also more costly a little bit for the investors because then every time I'm setting up the documents, just the legal documents, like 15K, right? So that eats up everyone's profits. Plus the timing. If let's say there are great deals that you can easily plug and play and you have a fund, then you can allocate to that deal. So I think it's helpful depending on where you're at. If you're starting and you're brand new, maybe partner first with someone who's already a great fund manager who's been there, done it, because then you'll have other responsibilities such as cutting your K1s, right? It's the end of the year, beginning of the year, tax season. You got to make sure distributions are done right. And so you just got to make sure that you know what you signed up for, right? Because it's a fiduciary responsibility. There are tasks that's needed if you're going to
Right.
set up a fund.
Very cool. Have you had any deals that I guess have challenges in the deals, and how have you been able to communicate or navigate through that with your investors?
Yeah, so luckily no capital calls, which is great for the last 8 deals, right? And again, I started my first deal closed mid-August of 2022. But that same thing, right? The Sugarland deal. But also cap rates were different then than now. And so yes, for certain deals, we're starting to do the tax abatement. We already got approved, which is good. Because anytime you can, because sometimes if rents are not growing as fast as it should, then you got to look at the expenses. Our biggest expense is what? Taxes. So what can you do to abate the taxes? So if there's options to do tax abatements, which really means at least for Houston, okay, and I don't know if this is the same for across US, but at least for Houston, and I've seen it also in Dallas, there's a way that we can reduce our tax liability by renting the units to lower income households. The good thing with our properties, even if we don't change the tenant profile, we're already meeting that ratio. So we're really not doing anything. All we're doing is like applying for this tax abatement, which will save us hundreds of thousands of dollars per year in taxes. And of course, you got to refinance that. So I have certain deals like that. I have certain deals that are not class A or B. So let's just say they're C plus, not in the best area, but we did get it a better cap rate, entry cap rate. So let's say we got it at six cap back in 2022, which was great. So even though we're not distributing, right, for that deal, we're ready to like refinance actually by end of this year because we bought it December of 2022. So far, so good. And I think that's also based on not just vetting the sponsor, because at the end of the day, you got to make sure that they're going to do the right thing,
Mhm.
but also initially, I was very particular with rates with the deals I was involved in. Some of the deals, for example, San Antonio, we had a deal, 382 units, 4.785% fixed rate, Fannie Mae loan, 7 years interest only. And this was July of 2023. No, and then October of 2023, I think our other rate was 5.8% fixed rate Fannie Mae, 7 years
Mm,
interest only. So you only get those types of rates when you're partnered with someone really good because
right.
they have track record, they have the bank backing. And so I feel better that if, let's say, whatever happens the next 3 to 5 years, if we really can't perform or whatever, then we're okay. We have year 6 and year 7. But I don't do anything past 5 years, ideally. Like today, I got an underwriting for a deal for 10 years. And right away, I told them, sorry, I'm out. Just five
Gotcha.
years. It's already long.
Okay. Very good to know. Yeah. And then as some of the deals, when you had challenges with them, did you have any investors that got very concerned or very upset or anything like that? And then if so, like how were you able to calm them down?
Yeah, disappointed, I think is more of the word, right?
Mm,
Because again, these are my first two, three deals. They're all new investors, meaning either they've never placed capital in multifamily. And so it's setting the right expectation because
mm,
basically their question would be like, oh, I thought there'll be distributions. But if you really look at it, if the money's in IRA, it's not like they're touching it either. I don't want to, but really it's not impacting their day-to-day lives. And if you feel you have those investors that are like pulling their hair out for an extra $500 every quarter, you may not have the right investors. So I'm very selective of my investors as well. I have turned down people. I don't just accept everyone to invest with me because I also vet, is this the right investment for you? It is a 5-year hold. And so for those people that maybe can't handle the whole 5-year ride, maybe it's not for them. So that's one, but communication is definitely key for all of my deals, right? Especially for those that are fun. So aside from the K1s and the distributions, I send the newsletter for that, right? I really, if anything, I feel like I over communicate for certain deals because especially those that, let's say we're doing a refinance very soon. And so we have to pause distributions. Let's say you just got to explain to them enough, right? Because even if you explain every single detail, they may not even understand it, right? Like they're not in the day to day. That's why we're here, right? As general partners or fund managers. But I think relationships would supersede that. I think if you have great relationships with people and they know that you're doing your best, I think they're accepting of it because they know it's a challenging market. We just went through an election, and then now, of course, because we're in real estate, people feel strongly that it's going to get better. And depending on where you invest, you got to also look at your what's happening on the market. So if let's say certain areas are flat rent growth, what's the next step, right? Are you projecting maybe 1%, 2% rent growth? So you got to explain that as well, especially if there's major changes to the deal.
I see. Very good. Any other things that you have learned along the way, either lessons you've learned or resources you came across that has been very helpful for you that we haven't touched on yet?
Very different than real estate. I'll talk about two things, especially because it's the beginning of the year. I'll talk about health and your personal growth.
Mm,
Okay. And I'll explain that because my first year, 2022, if you look at my calendar, I've been to like all kinds of events for real estate, but also personal growth. Like I grew a lot that first year, not only on the health side, but also I went to Tony Robbins, I went to like meditation retreat because I really went all out. Because again, I gave myself that timeline that in 1 year, if I don't make it, I can always go back to my CFO role, which I didn't really want to do because I want to have the flexibility and I want to build something of my own. So whatever that means for you. So in terms of health, right? It's hard for us to show up 100% to our investors or to our friends, family, if our health is not 100%, right? So energy, right? What are you doing to really maximize your energy? I wake up really early, even though I don't have to, right? Because I'm working from home, right? But my goal is to continue to rise early, like 4:30, 5 a.m. I'm at the gym because I wanted to have that time for myself first before I go serve others, including my family,
mm,
including my members. So I got to make sure I am strong, right? And I'm healthy. The second one is on personal development. Yes, I read a lot of different books, audiobooks. Um, right now I'm more into biohacking and definitely meditation. Yeah, I'm just being more clear in my purpose because it's easy to just go through the motions of being a capital raiser or syndicating deals and you're going deal after deal. But what is your why? Why are you really doing it? What is a lifestyle you really want to create out of this? Because it's phenomenal. The billionaire I talked to you about, he started in private equity. This guy didn't even go to college. He's literally worth
mm,
more than $1 billion. And he's just like you and me. The only difference is he's done it for 40 years. So this can be very lucrative. But with that freedom comes responsibility. What are you doing right now with what you can control? You may not be able to control who's going to say yes, who's going to say no, but what does your calendar look like? Are you out there improving yourself? Because really, you can only give as much value to others when you feel you're valuable, when you know you've put in a lot of good information in your head. And now, whoever comes around you, they feel like they got something out of it. And it doesn't have to be real estate or just money related, that they felt that they were served. So I come out with that type of intention that
mm,
whoever I have in my calendar for that day, that they'll be blessed. Okay. So I wanted to touch on that because I know
that's so
Tim and I
good. That's
can
so
go through
good.
this all day, but those are the two that are game changers for me.
Wow, I love that. I love that approach. Yeah. Yeah, I love that approach of you have time for yourself so that way the rest of the day you can give more and yeah, seeing everyone on your calendar as an opportunity to serve them, as an opportunity for them to get value from you as well. I love that. So here in 2025, is your plan is to create your fund this year, is that correct?
Yes, I have
What,
a few.
yeah,
But
share
yeah,
with us. What are your vision here in 2025?
yeah, so I'm writing a book. It'll be out in mid-March, right? So I start writing Thursday. So I joined
Oh,
a group so that we all write together. I'm starting a digital course as well because right now I feel like my first 3 years, it was all me. One is to one type of marketing, and there's just so much I can do in 24 hours. So I said, I have to be like Tim, one is too many. I have to really multiply myself that way. So also a digital course. I'm starting a podcast after the summer. But recently, as I was journaling, I was like, "Ooh, I like Thrive in 2025," right? And I was like, "What if I
mm,
create a $25 million fund?" Because now, all right, great, 10 million is good, and that's without any deals that's going full cycle. Because it's easy to raise 10 million when you have 2, 3 deals that's already gone full cycle, and you just use them again. And so now I can see 25 million. I don't know how it's gonna work, right? Like how exactly I'm gonna get there. I just know that's gonna involve a lot of marketing in terms of social media stages, anything that I can use to multiply myself. So that's what I'm thinking. I'm also starting to think about expanding my investor base to international
mm,
investors, right? And you and I can talk more about that too. But that's really, I think, once you're at a level, right? Because for most of us, right, we're like, okay, how do I get to the first million? After you get to the first million, you do it a few more times. So let's say you're in 10 million. The next step is 100 million seems like it's a far jump. But I was at another event, JT Fox, I think him, Tim.
yep,
So he was coaching me in LA, and I told him, how do I go from 10 to 100? And that's exactly what he said. Do more of what you're already doing. Because sometimes it's just repetition. Yeah, you may have to
yep.
tweak, you change the tools a little bit. But for me, that's my next goal. How do I create a $25 million fund? And that's not going to be with a bunch of 50K, 100K investors. I'm starting to also work with high net worth, not just high net worth individuals. What do you call it? Family offices. And there's another one that's 5 million and above. I forget what you call them. But basically, the more that you can do more of what you're doing with higher net worth individuals, then I guess the more results you're going to get.
Very cool. And follow up on your book. What's the topic of your book?
Yeah, so in 2 days, we're going to narrow it down.
Okay.
I have one is either I talk about how to bring foreign investors here. The second one is just really a book I can give out if anyone asks me about multifamily or
Hmm.
just investing in syndication. So that was another one. So I have a few. That's why I said, you know what? Let me work with a group so it could be more crystal clear and I'm not trying to
Yeah,
figure it out myself.
I love
But I
that.
think whatever it is, it'll be how do I replicate what I'm already doing? Because if someone asks me, hey, how does it work? Instead of me explaining it to them for an hour or two, I just give them a book. So it's not for it to be a bestseller, right? It's not, okay, you're going to get rich through the book, but rather, how can you replicate yourself through all these types of media so you can be more effective?
And then what about your digital course? Have you already decided the topic for that? So is it going to be the expansion of the book?
Yeah, I think it'll be an expansion of the book. That's why I said, let me do the book first, and then I'll do the course. Because right now there are races as well. I have certain deals that I'm working on, so I don't want to be too over leveraged with time. I just
Hmm.
want to make sure I have enough time for the rest, right? My health, my family, right? Spiritual life, business, and then these projects. Because I think the more that I could, and if there's one thing I would have done sooner, is exactly this. But I had so many deals, one after the other, that finally now I
Yeah,
feel like I can breathe and I could be like, you know what? I'm not going to take any more deals for now. Let me focus on these, and then I'll be more effective
right.
in in those deals.
That's super good, super good. All right, Andrew, for those that want to reach out to you, connect with you, obviously for the show, you have your contact information and with your virtual background
Oh
there. But
yes,
for those that are listening on our podcast later on, where can they best reach out to you?
yes. You can connect with me either on Facebook or LinkedIn. I'm active there. You can also go to my website, www.beam, investmentgroup.com. And happy to connect. If you're ever in Houston, keep me posted. If you're looking at deals in Houston, keep me posted as well. And if you're interested in either not just real estate, but even businesses, because that's really the next step, right? How do we leverage all this equity to fund the right types of businesses? Keep in touch.
Very cool. Andrew, thank you so much for this amazing interview. I love everything you've shared, and you're so open about your journey and yeah, the golden nuggets you've given us on this interview. Thank you so much. Super blessed to have you on the show.